Right guys, so in this week's video we are doing naked charting. We're not doing bar by bar, and the reason for that, well, there's a couple. One, I just wanted to show you the strategy as a whole without any sort of bias. I want to show you how to basically backtest a strategy. Okay, so once you've understood the strategy, then go into bar by bar. But when you don't know the strategy fully, just use a naked chart like this. Okay, so not clicking through one by one, you're just looking at the whole thing. You mark up every single trade without any sort of bias, and then you can add your own additional confluences like premium versus discount, whether or not it's a whip break, and so on and so forth. Now, a bit embarrassingly, post-edit in the video, I realised halfway through I hadn't included the Friday in the video, so I've had to add a little bit on to the end of this video. And quite frustratingly as well, I had lost the direction of the trend. So I cut the video, probably it's going to be about 40 minutes in. I cut the video and you'll see basically an edit from about half an hour ago. Now, really frustratingly, I honestly thought this week was going to be a loss. The market moved really quite strong in one direction, didn't get tagged into anything. The only things which I did get tagged into were losses, bar one trade. And I thought, oh, finally, I'm actually going to get a losing week here, and it will show that the strategy is not invincible, and it can shut down some of these like dumbass haters out there who are like, they just don't know how to trade themselves. But I literally prove here on a week where I thought I was going to lose, I end up getting a few winners, a load of losers, and if you just hold your trades, you're going to be absolutely fine. Now, if you're new to the channel, I'm just going to talk you through really quickly the style in which I trade. I trade pullbacks, and I trade pullbacks zone to zone. Okay, so I use the higher time frame initially. So say that these are just daily zones. If you can master the higher time frame, like the daily and the 4 hour, getting entries off the 15-minute and 1 minute is basically how you're going to maximize your potential. Okay, so let's just say that these are the daily order blocks or points of interest. So the market is moving down. Let's say that's a downward trend, taps into one daily over to the next daily. You drop down to the 4 hour or the 15-minute, try to get a reversal pattern and feed it back to the next point of interest, and continue to trend down, okay, in a nutshell. Now, let's say, for argument's sake, that there are a couple of H4 order blocks within, okay? So H4 zone there and a H4 zone, I don't know, here. Okay, so price comes down on the daily, creates a kind of pullback, order block, POI, whatever you want to call it. We get a reversal pattern down here, which is great. Get that on the 15-minute or the 4 hour. Price works its way up to the 4 hour. And you can get a reversal pattern on the 15-minute, work its way back down to here. Then you get another reversal pattern on the 15-minute, work your way back up to here, breaks through, get into the next H4, breaks through, drop down to the H4, and then down to the 15-minute, get the reversal. Then it bounces off this new order block, which has been created, or new pullback, and then bounces off of here, and then back down to here, which is your intended target. And that's literally just how I trade. So daily, well, weekly, daily, 4 hour, they're my main time zones which I use, or time frames which I use, and then I try to get my entries on the 15 minutes. And the reason for that is you can just set alerts. Okay, you can say, right, okay, this H4 zone, sorry, I should draw them back on, this H4 zone and this H4 zone, they are probably going to be, I don't know, 10 hours away from each other. So I can set an alert on my chart there, and that will ping onto my phone, it will ping onto my watch, so I can wait for price to come up to it, taps into it, happy days, I get the alert. I can then start looking at the charts for an entry position, get the entry, follow it down to there, job done. Because I don't want to be sat at the charts all day every day on the 1 minute time frame trying to maximize every single trade, trying to make £1 million in a week, because what is the point? You've just swapped a job for a job. Okay, you're now just trying to trade full time, which is again completely pointless, because if you're just sat trading all day every day, you're going to burn out, you're going to hate life, and you're probably going to want to switch off from trading because you're not enjoying the money that you're making. But you can do it on the 1 minute because the market's fractal. It tends to do the same thing. Anyway, enough waffle for me at the very start. As I said, the whole video through, I'm trying to lose the week. I'm actually trying to lose this week by taking every trade available. There is one trade that I missed. There's another win that I missed, which would have made the result even better. but you know, I show that in the video. Anyway, I hope that you enjoy it. Please do subscribe if you haven't already, because this, you know, find me a better strategy. There probably isn't one. The whole thing has been derived from the London breakout, when I realized that price is sometimes working its way back into a zone, figured out what it's reversing from, why does it reverse from there, and I realized that it's pullback trades. So I just refined it over the last couple of years. I hope you like it. Subscribe. Any questions, stick them in the comments, and catch you guys soon. Okay, so what we're going to do is we are going to jump to where we had got up to previously on the charts, but the week ahead. Okay, so let's go to buy replay, and I think that's going to be, where do we go up to? There. So we want to get to the 12th of February. H4, double check. Yeah. Okay. So we had got up to previously in the last video here. Okay. Now, what I'm going to do is, first of all, we're going to map out, we're just going to do every trade daily. You know, if there's any dailies available, we're going to take them. And then 4 hours, and then 15 minutes. Okay, so we're actually going to tally. I'm going to write a tally up here for trades won and trades lost, and we're going to stick to the plan. So we're going to be taking anything which is pro trend on the higher time frame. So let's say, for example, we're looking for entries on the 15-minute. It needs to be going in the correct direction for the H4. Okay, so we're not going to be taking any counter trend on the 15-minute, and the same with the H4. If we're trying to chase a daily order block or a daily point of interest, we're only going to be taking trades in the direction of that on the H4. All right. I'll do a video, maybe even next week. Let me know if you want to see it. I'll create another video where we just take literally every single trade, and I will show you just how messy it gets. Not just how messy, just how diabolical the strategy can be if you are not taking the trades based off the higher time frame. The higher time frame is so important, and it's so underrated. Okay. If you can master the daily and the H4, the 15-minute, you're just following a reversal pattern, and that is it. That is literally how simple this strategy is. And I just look at reversals and pullbacks, and that's literally it. You just get the reversal pattern, off you go. You know, dead simple, dead simple. Okay, so we're just going to mark out on the daily to begin with, the highs and the lows. Okay, and then we're going to see where can we get any entries. Can we get any entries? So there's the high and the low, the current range. Let's just see where we got the reversal pattern happen. Evidently, definitely here. Potentially this one, very minor, but nonetheless, we got the reversal. The other low is probably down here. Yeah, probably that one, and we're miles away from it. So the actual leg on the daily is from there to here, and ideally, you'd only want to be taking trades. I do beg your pardon, actually, that's not the leg, but that's the initial sort of move down. That would be the weekly. So the actual leg is going to be where we got another break there. So my apologies, I was jumping the gun a little bit. The actual leg is from here to here. So there is going to be a daily position, and there is going to be a daily position, which we want to take a trade from. Potentially. This one looks like it's been mitigated 3 times, so very, you know, not very strong at all. This one, a push up before an aggressive push down. This is definitely the area which I would want to be getting in a reversal for to try and drive the market back down to here. So this would be the entry point. We're going to do this on every time frame, and obviously, you know, the risk reward isn't going to be very good because you're just doing daily to daily. You're doing the same size order block to the same size. Okay, so let's just switch that to here. So, yep, we've got an entry, but, you know, 3.39, you'd be in the trade, you'd be in drawdown, and that's fine. So daily, 0, okay, at the moment. So for the daily, entered 1, result, not finished, in drawdown, okay? So that's the daily. Let's take that off the chart. All right, so that's that. Next up, we want to move to the 4 hour. Okay, so we know that this is the daily zone. I'm going to draw this back on actually, just as the point of interest, because it's relevant. Why? Because it's a higher time frame than the H4. Okay, so let's just draw this on as a daily. Sorry, still coughing quite a lot. And before we drop down to that, let's just get the high on here as well. Daily structure, and I'm just going to put on here daily structure as well. Day structure, day structure. So at the moment, to hypothesize this or to create your own little story in your mind, price is moving down. We got chalk on the daily. Price came up, entered into this order block, got rejected from it, created a new low. So the daily is technically in a downtrend. Yes, we've had 4 or 5 days of straight up, moved upwards, which is cool, but it's only to get into the first order block, which has come up, which is a very clean order block. There's a little bit of imbalance right there. Price will come into it. We're reacting from it. We're getting a couple of wicks. Price might break above it for next week and then work down, or it might press through, get a reversal from a new order block, and off we go, whatever. So that is the daily. Okay, so we're going to drop down to the H4 now. I'm just going to move this a little bit out of the way. And we are going to figure out what's happening on the H4. So starting from over here, what's happened? We get pressed down. Let's just mark out all of the swings or all the breaks. So structure, sorry, not daily, that was H4 structure wicked. And then we get a H4 structure body, and then we get a H4 structure wicked. And then we get another H4 structure body. So technically we get the reversal pattern down here. One thing which I forgot with the daily, work left. Okay, so we marked up the order block there, but what have we reacted to over on the left? We've reacted from this massive daily candle over here. All right, so price has worked into it, bounced off of it. If we were to see a true reversal going back up on the daily, like I mentioned, you see a break of this, press down, press up. Okay, but we have so far just reacted from this, which was the order block just before the previous break of structure. Okay, holds a lot of weight in those ones. Would probably be the equilibrium between here and here. Yeah, right on the equilibrium, really strong. Okay, cool. Sorry, back to the H4. Okay, so we'd reacted from this zone. We get chalk within here on the H4, which is really good. So daily zone, chalk on the H4, you can count that as the start of a trend reversal. Not confirmed until you break a bit of structure on the H4. So where's the initial break? The initial break was right there. The next break is here because it's a pullback. Okay, you've had a pullback in in price action, no press down. So this was the break to really confirm that we are going upwards now on the H4. So this is H4 structure. Okay, so break it with a body. Probably change the name of that to H4 structure body or H4 body and H4 wick. Where's the next one? The next one is literally just here, so really not far away. And that's structure wicked. Then we've got another one over here as we're working our way up to this daily zone. That was H4 structure. And then actually on this climb, what we have is these mini breaks of structure, literally just on the journey up. Okay, so you'd be paying attention to over here. Do you get a reversal pattern on the 15? If you do, potentially continue your way down. But obviously we can see from a naked chart that on the H4, we're trying to target the higher time frame up. Okay. So what do we have here? We have structure wicked. And then we have structure body. Don't necessarily get chalk here because that's just an inside bar. And that's the high and the low at the same point. So yeah, you could count it, but just from experience, I don't. And then what do we get? Structure body. We get another body break, but look at all these candles, they've all got wicks to the above. Then press up, and that looks like a wick. Yeah, it is. H4 structure wicked. And then the next area for price to break below would be here, which is the lowest point. H4 structure, okay? So looking at the H4, all what we're doing, like what I said at the very start, is we are looking for entries from the daily to the daily, because the time frame down from the daily is the H4. So if we were to take trades on the H4, you'd want to get involved in a pullback / order block on the H4. So we get the first sign of chalk down here. What had happened? Price had pressed up quite aggressively. It pressed down, tried to rebalance here, which I'd say that is done. Obviously, no entry off of this candle. Price came up, pressed down. Again, another rebalance with this, quite perfectly with this candle. Pressed up through there. Did we get an entry off of this down candle? We wouldn't have done, but we did get a rebalance. So what does that mean? Price continues on its journey. Pressed up. Did we get an entry off of this candle or this one? Nope. Price pressed up and then pressed down. So the next entry off of here, which we'd be looking for, if we hadn't had further breaks, would be off of there. Did we get an entry? Nope. What about from here, off of this candle? Did we get an entry? Yeah, we did actually. But was it a strong enough pullback to count? Not necessarily, but it is a pullback. It's an inside bar. We wouldn't class it for a break of structure going the other direction. So if price is broken down through here, I wouldn't use this as, a low, but it is a inside bar to be able to get involved with a trade. Okay, so we can place our entry off the H4, and then we will figure out our targets in a second. All right, looks good so far, but where would we target? We would target, ideally up here, up a break of this. Did we get the break? No. We're actually just running in this trade at the moment. Okay, there's no clear defined targets. We're on the H4, we're going up. We've worked through the D1. We haven't got chalk in the opposite direction yet. Where is an area of supply or demand coming into the market? Possibly just here. That's a lot of supply coming in. Supply came in off of this candle, but we'd already passed through it. So really, on the daily, let's flip back to the daily. There's nothing really to look at. I would probably want to target up here, but it looks a little bit ambitious because we are technically counter trend until we break this high. So you would want to be trying to actively manage this trade. This is a counter trend trade on the H4. I don't, it's quite difficult. I was going to say I don't know where to take profit, but you would want to look at an area where price is going to struggle. So probably here, just up on the high. But that's the only one on the H4, which is, certainly valid at the moment. But you could say bouncing off price action before. So where did we get up to? There. So if we were to take every single trade, bear in mind this is just an H4 order block, we would be looking for reversal patterns on the 15 around here. So I'll tell you what, let me just draw this up as an H4 zone. So rather large H4 zone. And then really refine it to the last candle as well. So there's an H4. And then up here as well. There's a refined H4, which obviously didn't hold out. But we want to try and get the entry off the 15-minute, okay? So, yep, on the H4, where's our little, there we go. H4 entered, one result not finished, but it's in profit currently. Doesn't look too good. Okay, so would we take any of these trades off of here? Possibly, you could get short from one of these and say, right, okay, I'm just going to take an H4 right there. But because it's not the daily, it's not the higher time frame above it, you'd just be going time frame to time frame, which means that you'd be getting a battering over time. At the moment, the daily is going down. Ideally, you don't want to be taking trades up on the H4. You'd only want to do it from down here if you could, up to the start of this zone. So where's the next actual daily going to be? If you were to get involved, and it's quite tricky. probably up here where there's a lot of supply coming into the market. So that might solve the issue which I had just a second ago, or potentially just there, which is the start of where the supply came in. So, quite an ambitious target, but you'd want to be doing a lot more active management when you're going counter trend. Okay, so don't like that one, but we can take that off the chart now and keep it a little bit tidier. All right, so let's get rid of these. Cool. Okay, down to the 15. Let's get rid of, right, okay. Yeah, that's cleaner. Down to the 15. Start off over here. So bear in mind, at the moment, we're going pro trend on the 15, because we've got all the movements going up. Pro trend on the 15. On the H4, we were, just to refresh my mind, once we got chalk, good. We got broker structure there, broker structure there. We're looking for longs. So we're looking for pullbacks, anything around here as a pullback on the 15. So I'm just going to highlight this area around there. So we're looking for pullbacks on the 15. Is there anything to get involved with? Now, to be able to do this effectively, just mark out literally where the breaks of structure are. So break of structure there. Break of structure there. And when I say break of structure, it's literally just continuing the trend after a pullback. All right, so I might have my terminology a little bit wrong, but it's the way which I define it. And then that. Okay, so we're trying to work our way into this zone. What is going to happen? Okay, so working our way down. We allow the market to open on a Sunday night. Price drops down. Do you want to get involved with this order block? Possibly, you could say. What has happened on the M15, by the way, we have had a break of structure right there on the M15, but because it hasn't happened in a significant area on the H4, there's no H4 order blocks around here, we don't really care. Unless it starts really dropping down and creating obviously like a strong price movement, which obviously it doesn't because we can see it. But unless price started doing something like this, we wouldn't really want to be getting involved within this sort of like mid-range trading. We're just looking for longs so we can work our way into this section. Okay, so we're only looking for longs. We're looking to react from order blocks on the way back down. Okay, so price is broken down. Let's say that we decide to get involved straight away on this and we start off with a loss. Okay, so I will literally just mark this down as a loss rather than draw it on the chart. So -1, red. All right, so that didn't work out. Where's the next area? It's going to be this one. What happened? Where was the entry going to be? Missed it there, got in there. What happened? It was a loss. So -1 there. Then what do we have? We have this deeper pullback, or the final candle, which is really quite large. What happens with this one? We get a bounce off of it. Cool. Big stop loss in comparison. Then our target, our initial target, is to continue the trend up, okay, on the 4 hour. And this is a 4 hour wick break, as we can see. So this should be our target, 4.08. Let's shrink that down. Okay, so once we got the break of that, we have entered into the H4. Okay, we haven't had the actual break of structure. The break of structure would now be the lowest point between here and here, which is there, to confirm a downtrend. Obviously, this is way too far. Price doesn't come back to it. So that would be the M15 low at the moment. Price does come down, tries to fill a little bit of the imbalance, doesn't. Okay, price is working its way up. We don't want to be getting counter trend just yet. Working its way up. We want to see a break of this or a break of that. Simple as that. or an involvement into an order block here. So let's be quite optimistic and say that one, if price was clicking through like that, you'd be thinking like, yeah, okay, potentially I'd get involved. If it slows down, I would get involved with that order block, but it doesn't. Okay, so price is working its way up, we get the break. Next order blocks, which you would be eyeing up, would be here. You know, if you want to be refined, you'd go for that final one. Any other order blocks which stand out? Probably here, because there's a little bit of liquidity under this. This would be like the equilibrium between this leg and up there. And then we also have that inside bar, but you'd probably, for the safety of it, want to cover that wick. And then obviously we still have down here as well. So we've actually got 4 order blocks, all right? So you'd be wanting to tally your data, put it into a spreadsheet. Would it be, basically you want to try and get 100 trades of each type of order block. So this one is just before the break of structure. This one is likely going to be the equilibrium. It might not be, but possibly the equilibrium. You'd class that as a discount. This would be a discount trade, but mid-range discount. There could be multiple of these, and then this would be the extreme order block. So you'd want to basically tally out 100 trades for the extreme, mid-range, equilibrium, and then pre-boss, yeah? And get 100 of them and see which ones have the best reward ratio, okay? This one has the best reward ratio because it's the extreme. It's about as far as you can go to the next target, you know? So before breaking the low here, if we get the reversal pattern on this, our target is still going to be the high up there. Obviously price breaks through it, but you know, you can't really get much more of a better entry towards the target. However, the ones which seem to happen to react to the most are pre-boss, okay? Smaller risk reward ratio, but they tend to play out a lot better. And then these mid-range ones, a lot of them get run, and it's very, very hit and miss. Okay, so anyway, price is coming up. Break of structure, lowest point is here, but we are technically within this like refined H4. So large H4, within the refined H4, we might be expecting a reversal, a pullback, to have price move down. So we will be paying attention here to any sort of chalk movements, all right? So you get a wick break, which normally means that price is going to come back in within the range. And then you get another wick break. So, you know, start off a whipsaw action, consolidation, press up, press down. The press down, we get another break. So we would then want to mark up because we would consider this as a reversal after this blue candle. All right, so it's within the H4 zone. We've got some sort of reversal going on. Where's the last kind of candle which you would count as an order block? It'd be quite difficult to define, but in reality, I'd probably just go with this candle. I know that we've had, you know, huge mitigations here, and you'd possibly even want to cover the base of that candle. So the base of this candle for an imbalance to be refilled, and then the peak of that candle. I know it's not ideal, but I would class this whole range. Nonetheless, it would be battered out, you know. With this, don't need to draw it all on, that's a -1, okay, because we would look to go short there, so -1. But what happens then is we get this break of structure with power, so we are back in our minds, we are going long, okay, so we're looking to go long. This was a daily, huge daily, so this is a potential reversal zone for the whole thing, okay. We're on the 15-minute at the moment. We've already done the H4 markings and stuff like that. But when you're looking at the chart around about here, you'd flick over to the H4 and see what works out best. See what looks best. Does it look as though we're going to reverse on the H4? If it does, start looking for the entry on the 15, right? So anyway, within the daily, how many pips is this? 62. Not huge, but you know, fine. So anyway, because there is no pullback on this giant leg here, what we want to do is literally just mark out an order block which we would be wanting to get involved in, and price doesn't return to it. Fair enough, fine. So once price comes down and starts working its way up, we want to start looking at some sort of form of chalk again. So we're getting wick breaks here. We look for the highest point between that, which is there. We could do the same here as well. So working our way down, you get a wick break. Where's the highest point? It's over here. That doesn't get hit before a new break. New break, highest point gets tapped. Price comes down. Personally, I wouldn't count this as continuation. I'd want to see a body break. So personally, I wouldn't get involved with this candle here, or even this candle, because that is just not convincing to me. But you could, okay? So yeah, sorry, just got to recap myself really quickly here. So we're pressing up, we're into the D1 zone. H4 is obviously an area for potential reversal from. We want to see an evidence of chock before we start looking to sell back into where we came from. Other than that, we will be literally just looking to get long. So yeah, we've broken out of here. I think, I can't remember exactly where we got up to, might have been just here. Internal structure break, price is pressed up. So the next order block, which you'd be interested in, is probably just this move down. Don't get a tag into it. You would mark this up on the charts just as potential liquidity. So just underneath here, there's a lot of imbalance here. Price is basically taking the imbalance, tiny bit between here. So I'd be quite, I wouldn't be comfortable taking the trade, but I would be very hopeful of getting a reaction off of here. If I was watching this live, if price comes back to it, I don't know if it does. I don't think it does. But no, if price comes back to it and this was live and I could do it on TradingView or whatever, I'd probably want to drop down to a lower time frame just because this is a good recipe for a bounce. Anyway, so price has continued its way up. We get press up. Do we get essentially chock? We do. So right there. Now we would probably take a loss here on live trading. So we get the wick break. After we got the body break, I would want to get involved in one of these and work our way down to here. Okay, so this is where we would take a very honest loss. So you get into that trade, probably get wicked out of that anyway with spreads. That's like 0.1, maybe 0.0 pips. And there's a potential for other ones here as well. Especially with this wick, you'd probably end up taking a double loss on this trade. There we go. So I'm just going to mark that up as 15, and this one's 15. So I'm just going to mark these as 2 losses because you would get caught out on this. Well, I would anyway. So price has had the breakout. It's now in like the middle-ish, yeah, middle of the D1 zone. So you'd be forgiven for thinking that it's going to reverse. You'd be jumping over to the H4 at this point as well and seeing whether or not we've got chock on H4, but you've got to have it first on the M15 before you do the H4, if that makes sense. So, you know, M15 in a daily zone is going to be the first indication. Well, first indication would be like the 1 minute or even the tick chart. But so many false signals with smaller timeframes. The smaller that you go, the more false signals there are. Well, not false signals, just more opportunities to get wrong. So yeah, you'd get a loss here, you get tagged into it. Your first target, because you're now going back down, is going to be probably here. So yeah, you'd get a loss. If your first target was there, you'd be all right, but you won't. You wouldn't do that. So anyway, let's just show where the risk reward ratio would be. It would be after that, so it would be this very next candle. Chances are you wouldn't see it anyway because of the time of night, but we're going to mark it on anyway. And yeah, 1 to 7, of course, you'd be trying to take that. Next up, we've got this one. It's not very good. The reason for that is that it's been fully mitigated by all of these. But if you wanted to say, like, you know what, I'm going to go from the wick of this, you might even want to say that, you know, just from the wicks. I don't trade that way. The only time you'll see me take a trade from wicks is that if it was on, say, like the H4 and I get a 15-minute order block from the wicks, then it would look like I've taken a trade from the H4 wick, but in reality I haven't. But nonetheless, this would also be taken out. Just trying to see where the pullback is. Once you get a break of here, that would be like the first sign of chock, but this would be the actual break. which you'd want for price to continue up in the trend. So yeah, you get a second loss here. So that's a -1. Okay, so price continues up. Where's the order blocks, which we're intrigued by? That was a press down. This was press up, I believe, if I turn that off. Should be, yeah, press up. Price has come down, grabbed everything from it, so I wouldn't be too comfortable taking this, but it is certainly valid. And this was the last press down, which was just absolutely huge in comparison. Let's just have a look at how many. Oh, it's only eight pips, so yeah, you would probably mark that up because it was last press down. Looks like we get into it over here anyway, so keep that in mind. So price is pressing up again. You can look to try and get involved with this one if you wanted to at 2:45 in the morning if you were trading it. And this is the H4 zone. So again, we're looking for potential reversals, potential chock around here, which you do get. So you can either say, right, okay, I'm going to try and get in, but as soon as price presses up and then starts rejecting again, it pretty much invalidates this trade because you're looking for chock right here, which you would get before you get an entry into there. Right, so there's your chock formation. You would be looking now, instead of taking that trade, you would be looking to take this, or, you know, potentially that. But because it's an inside bar, I'd want to take that one. Not a very, you know, not a solid sell-off from here, so not the best candle, but if you're trying to take pretty much every possible one, every plausible one, it would be this. So that's on there at the moment. We haven't taken anything because we've not been tagged into it. Mark that up. And if you wanted to, you could literally say, right, okay, this is a pullback. I'm going to get involved on this one. So let's show about there. And your first target would be where you're going to run into some sort of, you know, demand coming into the market, which is probably that candle. So your first trade would be, you know, to take any sort of sign of profit is 4.5. Obviously you don't get it, so it's a -1. Okay, -1 right there. Don't get a pullback here. So the high, it's a break to get chock again, is right here, which indicates that price isn't finished. Is it going to come up and just tap into this because we've got a tiny bit of imbalance? Maybe. So you could take that trade if you weren't convinced by these wicks, but you definitely would be. So that trade comes off. It's pretty much been invalidated by the price action. We then get a break of this high as well. So we're continuing up. Once we got the break of this, we could say, okay, we can try and target this wick, but chances are you won't. Not wick, that candle, sorry. It has swept below here, which is good. But then this candle has also taken what I would have thought was all the juice out of this one. Obviously, this one comes down. Press up, another wick break, showing to me that the market is showing signs of potential reversal or exhaustion. Still within the D1 zone, expecting potential reversal from here. Not going to take anything off of these. Yep, this candle has created a high and possibly a low, but I don't like that. Breaking up higher again. We have that to go by if we want to. But look what price does here. What's that reacted to? Has it reacted from anything over on the left? All of this sort of choppiness, which I don't like at all. That huge rejection, you wouldn't want to trade off of that and take another buy signal, would you? What's the time? 8:45 in the morning, probably not. So price is coming down. This is the pullback. So there we go, there's chock within there. And that has left behind this, which now looks so much better as a reversal. Get a wick break. Now you could say, if you wanted to, that you've got up here as the extreme, you know, this new leg that's the extreme, that's just another potential entry. So if you took all of these, obviously, it would be a series of losses. So I'm just going to put -1 on there. I will do another one off of that just for the sake of it. So there's -1. Then up here, you'd be entering into that as well. We've got a little bit more of a defined target with that now, which is good. So I've just got to jump in and do some late video editing on this because I've realized that I got the direction wrong after this stage in the video. So what I just said is that you would take this trade. In a matter of fact, you wouldn't. Okay, so this trade gets taken out. And the reason for that is we ended up getting another break right there. Why? Because you got a little break here. Yes, it's only with a wick, so you wouldn't want to pay too much attention to it. But we did get a break of the high here, therefore creating what everyone calls chock, going upwards. So generally speaking, you would now be looking to go long again because this would be a target. So the next entry would actually be here on this order block right there. So order block, order goes straight on there. Probably get tagged out anyway. So low 1231, 1232. So you would actually stay in this trade. So we're just going to enter this on, and yeah, looks like it's going to be a loss anyway. And your first target would either be here, but if you're trying to reverse back on the H4, so you're going in the same direction as the H4, this is the target. If you're targeting the 15, it would technically be this, so you could take out a little bit of a trade. But for the sake of the video, we're not going to, but we are going to mark this down as a loss as well. Okay, obviously you can see change the colors. I've changed my chart slightly since, so this is the -1 just in case it was to cause any confusion. So -1 goes there. I'm just going to change the background to red. It doesn't make a difference. Okay, so -1, and we end up working our way backwards. So there's a little mini high. Bear in mind, high, low. Once this low breaks, the highest point is technically here. Okay, so highest point is technically there. Oh, did I just add another line? I think I did. Get rid of that. For that, so price is working its way down. We don't get a break at this low, but because you're going H4 upwards, generally speaking, you would be taking this trade, okay? But a lot of people would be getting very chopped up with chock in this instance, okay? So if we just jump to the H4 to show you where we are, okay, we're in this section. The H4, there's a break upwards, we don't get a reversal on the H4 until over here, okay? So generally speaking, we would be taking that trade down here to try and get a break of the H4. So the M15, we would look to get involved in the last press down, which is there, a couple of lows. There's our entry. But if you were to take the chock, so literally just chock, it goes to show the importance that you should understand when to and when not to use this reversal pattern, okay? So we'll take all of them. We can take all of them in this instance. Actually, in a matter of fact, we get into this first. Okay, so there. Looks like we might get a couple of hedges on as well. And the target is up there. Okay, so there's a 10.48. Now, if you were to add this in, you would end up the video on a positive, okay? And that's getting the direction correct with one of the trades. Now, coming back in with the post-edit video, I realized that my charts had only got up to about here, and I hadn't actually included the Friday. So let's continue, okay? So this was the night where I was meant to be editing and just cutting out all my coughs and stuff like that. But we are going to just continue the journey, okay? So, right, okay, so we established that that is a -1 right here. Price works its way up. The range now, so we got chalk back upwards, worked our way down. H4 is still technically going up. We haven't had the reversal on the H4. Work our way down. We can get into this because the new range is between here and here. So this is the target. You do get involved in that trade. Price comes up. We basically get a break of that, which is cool. Find the order block, which is this one. So let's actually play devil's advocate here and say that you're going to play this one as well. Okay, it's an inside bar. You know, it's still a white candle effectively, so it's still a bullish candle. But some people will play the inside bar, so we're just going to mark that as a -1 as well. Okay, so -1 right there. And then this one will play, and that is a 9.63, so that's also a -1. All right, so -1. So the new range is there to there. Price works its way up, presses down. Once we get a break of this, we're now looking at the highest point. So the new range is between here and here. Generally speaking, you don't want to be taking anything in the premium zone, so you don't want to be taking anything in the lower 50%. But for the purpose of the video, we're taking every conceivable order block. Also, I'm just going to check and see where we are on the H4 to see if we're getting our reversal in. So I'm just going to put a horizontal line on there to indicate roughly where we are. God, look at all those losses. So yeah, this would equate to the break of the H4, or would it? No, it wouldn't, not until down here, so the 4S. Okay, so we're still looking for longs at this stage. So drop to the 15 again. But we can go following shock on the 15 because we're expecting potential. We've already broken through this H4. We're still in the daily. The 15 provides the earliest sort of, well, not 15, the 1 does, or the tick chart even, but we can still try to get in on the relevant short. So once we've got a break of this, our pullback zones are, let's just mark all of them out, because when you're piecing together a strategy, you don't necessarily know about premium versus discount or anything like that. So last pullback, one of them is going to be that, which is a loss. There is another one just here, which is, in my eyes, personally, I wouldn't have taken that one because it's more or less rebalanced. That one's been mitigated already, and these just look rubbish. So anyway, yeah, you get another -1 here. No need to draw it out on the chart. So -1. We do get an entry off of this one, but the first target would only be here. So let's just draw this one on. Now, I had originally created a start to this video where I talk about, you know, basically here's a week where I have horrendous losses because I didn't count this and I didn't realize that I've got this trade. And basically it was just a sea of losses, apart from this one over here. It was just a sea of losses getting mixed up in the wrong direction, taking shock every time you see it. Doesn't matter if it's premium, discount, whatever. And I didn't have anything sort of like beyond here on the chart. For some reason, I completely missed that had, you know, Friday missing on the chart. Let's get rid of that now. So I've now got to change the start of the video, which sucks because I'm in quite a rush to get this video out because I've got stuff to do this evening. So yeah, anyway, first target is going to be just this low. Just going to double check that's on the right line. Yeah, about there. Just going to pull that across. Oh my days, right. I've changed, as you can see, I've changed all the colors on my chart. So yeah, just post edit 7.53, so that's plus 7.53. So I actually tried to get a losing week in here, and I can't. Every time the guys and me do group back testing, and we say, right, you know what, Next week, I'm just going to take every single trade which is valid. I'm going to take it, and I'll end up, plus 15 to plus 30, and beyond. And we try to interfere with the strategy by saying, okay, this order block is better than this one's better than that one. And in reality, even now, just in post edit where I've noticed a mistake that I made, even now I can see, like, blimey, even in a week where it was evidently looking horrendous at one stage, where it was like 5, 6, 7 losses in a row, you still come out and hit a 10.5 and then a 7.5. This is going to end up on a winning week. And I actually tried to get a losing week for everybody, just to show you that you shouldn't really interfere with anything. But anyway, here we go. So price of press down. Once we've broken this, we're looking downwards again, and this is the H4. So we've got the break on the H4, which is cool. We can now start looking at taking pullbacks to go short, but literally just following it directly. Let's jump back to the H4 and see if there was a H4 trade which we can get into at the end. Yeah, right here. So there's the H4 break. Last push up. You'd be kind of in this trade going into the following week. So hopefully I've still got this stuff over here. So entered 2. I think. Entered 1 or 2. Maybe I marked it up as a daily. Yeah, 1 or 2. Okay, I'm not going to go back and double check that. So sorry if that's not so clear on the video, but we definitely haven't had a closure of anything on the H4. Or the daily. Oh, I can't remember what I just marked up there. Anyway, so working our way down. We're now just looking for shorts, particularly. We could say that we're going to get involved here. So maybe we are going to get a series of losses just to show you guys. But that target is going to be down here somewhere. Let's just go to the H4 again and see where our fresh H4 target is going to be, because there's going to be new order blocks printed surely. Down here, so that was the demand coming into the market. So target would be at the very top of this. Let's just mark this up as H4. Sorry, in the post-edit video, you're going to hear where I'm coughing a lot. This is going to be jumping. Is why I cover this up most of the time, because it's just a real pain. Frequently taking breaks because I've never quite recovered from COVID. 15 minutes. So we're already within this zone. So that's not helpful. We want to try and target a potential order block, which is going to be an issue to us. So that looks like it fed demand going into market. Got a little break of this mini high working our way up. So we're going to say this is our target. I'm not sure if it actually hits. Don't think it does. No, it doesn't. So anyway, there's the M15. But look at that for a rebalance. Yep, get wicked out there. So that's a -1. So there's another -1 right here. -1. The next reversal is technically up there. It's really kind of up there. Oh no, it is. It's up here, sorry. Up there, but we don't get that. So the new reversal is right here. And this being a wick, just like experience tells you, you shouldn't really be marking up to get short from there, but we're going to do it anyway because we're taking every conceivable order block. And you can just see, literally, you just get chopped up all the time. So you've got to have like a degree of knowing roughly what you're doing. So you get chopped up there. Let's say now that you've got a break, even though it's a wick, and price starts coming down, you can go for the next one, which is, I'm going to say here that there's 2. There's quite often 2 on everyone. So there's the last push up, you get a loss, and then there's this one, really, which was an attempted push down. You get a loss. So I'm going to call this another 2 losses. Maybe we will get a losing period. So -1 and -1. And don't forget, even though you might end up with a winning week here, potentially, this is not going to do well for your confidence. 4 losses, another loss there. Like, this would be hitting your confidence hard, just getting so many losses. Don't get that many losses in a row. So anyway, price has worked its way down. It's now broken this. The new high is over here. Okay, so we actually get a mini break and a push up. So that new high doesn't matter anymore. We've now got chock here. Has it reacted from anything? A little bit of demand. Cool. Okay, so we're going up again now. We don't get tagged into anything here. So no tag there. Left behind a little bit of imbalance, so price may well return to it and use this in the future. We don't know. Press up. Okay, cool. We're definitely going long again. On the H4, we're not. The H4 is showing that until we get a break of up here, we're now back in the downtrend. Right, so H4 we're down, so any trades going long, we're going technically counter trend again. All right, so H4 is down. Daily, I think, was down. I'm just going to jump onto daily. Sorry, this is, added an extra day on here by accident. It's included the Monday, but it doesn't matter so much. Daily was down until we get a break of that. So, right, cool. Just to refamiliarize ourselves, guys. This is so frustrating, adding an extra edit on the end. But it is what it is. Now, you could be very foolish and again count wick breaks in your favor and say, right, okay, this is the new low to break. I wouldn't personally because, well, experience. So that would be a -1 because we'd be looking to go long from there. Didn't work out. Once you get a break of this, you can say, right, okay, we're at a 2, probably 2, probably maybe 3. There's a -1, and the last push up is actually this candle. And the end of the week is right here. But as you can see, if you were to have taken that, you're probably going to lose out, considering we saw the next day was actually a push up. So I won't count that one because there's no conclusion to it, but we will count that one as another loss. Okay, so even though I have actually intentionally tried to lose on the week, I don't think you can. So let's do a tally up of this correctly. Let's go from the very start. Okay, sorry, some of this is not in red and green. I'm still just using the colors which I tend to use on my live charting. So where did we start off that week from? It was from Sunday over here. So let's get the little calculator up, and so we are -1, -1, which is this one, and then plus 4.08. Okay, so we're on 2.08. Then you get -1, -1, -1. And then minus another 3, so -1, -1, -1. Okay, so after this, we're almost -4. This one was also a -1. So, -1. This one ended up being, I didn't draw it on, but plus 10.48. Okay, so plus 10.48. 5.56. So you'd be feeling quite positive by that point. Tell you what, we might actually have a losing week. So -1, -1, -1. Plus 7.53. Okay, up 10 at that point. This is crazy. I've tried to lose this week. I've actually tried to lose, and it's going to end up as a positive. 1, 2, 3, 4, 5, 6. Okay, so just minus 6. 4.09. Okay, and that is just taking every conceivable, in direction of the trade, in direction of the trend. So 4.09. Okay, so let's just go back to our little tally thing that we made, wherever it is. So M15. And just for good measure, let's just have a real quick count of the number of wins versus the number of losses, because this would destroy you mentally. So 1, 2, 3. Oh, blimey. One, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, 12, 13, 14, 15, 16, 17, 18. 18 losses. I would not be able to stomach that in a week. I think it was only 3 wins. So that's mental, okay? So 3 wins. Now, when you look at that figure, okay, that's absolutely crazy. Even if those two lose, yeah, so that one's enter, it's not finished, and these two aren't finished. That's 3. Take them off, say those 3 lose, you're still up plus 1.09. With spreads and commissions and stuff, you'd be break even. All right, so you'd give back that 1% over all these trades quite easily. But generally speaking, I literally tried to fail this week. Because I wanted to try and take every conceivable trade. Now, every time that we've gone through group backtesting in the Discord group, we have always ended up with a positive, apart from when we did 1 week with gold, and gold just was awful for that week. But with EU, which is the main trading pair that we use, we just can't lose. But the losses come in when we start to decide, okay, this order block over that order block, or this order block over that. Now you can tell that there's multiple trades here where if you used the strategy correctly, you could wipe out half of these losers and you would have ended up taking all the winners anyway. So, you'd have less heartbreak. Let's say that you even just got half the losses, 9 losses, 3 wins. It's still not a great, it's a win rate of 25%, but you would still be smashing. Add 9 to that, you'd be on, plus 13%, plus 12 after all your comms and spreads. But guys, yeah, I tried to fail this week and I couldn't. And it's literally just the most easy strategy ever. I just trade pullbacks. It's literally, I just trade pullbacks, and I've just refined it. So, yeah, anyway, I thought I'd throw in right at the end, Discord group will be open again in November, sort of like early to mid-November. If you're watching this video late on, there's probably going to be a link down below where you can apply. But thanks for watching.